How credit scores really work. Explained simply. Your credit score is one of the most powerful numbers in your life, but most people don't actually understand what it is, how it's calculated, or why it matters. You can do everything right and still have a bad score, or do something small and accidentally hurt yourself. Today, I'm going to explain how credit scores really work in plain English so you can use them to your advantage instead of being controlled by them. Let's break it down. Your credit score equals your trust rating with lenders. At its core, your credit score is not about your worth as a person. It is simply a risk prediction tool. It answers one question for banks. How likely is this person to pay us back? If you look reliable, your score is higher. If you look risky, your score is lower. Your score doesn't care if you're hardworking, smart, or kind. It only cares about your financial behavior on paper. Credit scores usually range from 300 to 850. Roughly speaking, 300 to 579 equals poor, 580 to 669 equals fair, 670 to 739 equals good, 740 to 799 equals very good, 800 plus equals excellent. But here's the key idea. Good enough is often more important than perfect. The 5 ingredients of your credit score. 1. Payment history, 35%, the biggest piece. This is the most important part of your score. It asks, do you pay your bills on time? Even one late payment can hurt your score, not because the system is mean, but because lenders see late payments as a warning sign. Simple example, if you borrow money and consistently pay on time, your score goes up. If you miss payments, it goes down. 2. Credit utilization, 30%. How much you use. This means how much of your available credit are you using? If you have a $1,000 credit limit and you're using $900 of it, that looks risky. If you're only using $200 of it, that looks responsible. Rule of thumb, try to keep your balance under 30% of your limit and even better, under 10%. 3. Length of credit history, 15%. How long you've had credit. The longer your history, the better your score tends to be. This is why closing your oldest credit card can sometimes hurt you because it shortens your history. In credit, time builds trust. 4. Credit mix, 10%, different types of credit. Lenders like to see you can handle different kinds of credit, like a credit card, a car loan, a student loan. You do not need all of these, but variety can help. 5. New credit, 10%, how often you apply. Every time you apply for a credit card or loan, it creates a hard inquiry. Too many inquiries in a short time can lower your score. Simple tip. Apply only when you actually need credit, not just for perks. Credit myths versus truth myth. Number 1, checking your credit lowers your score. Truth? No. Checking your own credit is a soft inquiry and does not hurt your score. Myth number 2, you need to carry a balance to build credit. Truth? Wrong. You can pay your card off in full every month and still build great credit. Myth number 3, closing a card always helps your score. Truth? It can actually hurt your score by reducing your available credit and shortening your history. Why your credit score matters in real life. Your credit score affects things you might not expect, like whether you get approved for an apartment, your car loan interest rate, your mortgage rate, sometimes even job screenings. A good score can save you tens of thousands of dollars over your lifetime. Example, 2 people buy the same house. One has good credit, one has bad credit. The person with good credit may pay hundreds less per month just because of their score. How to improve your score? Simple steps. Do these 4 things: pay bills on time, set auto pay, keep balances low, don't open too many accounts, keep old accounts open. If you do these 4 things consistently, your score will almost always improve over time. If this helped you understand credit scores, drop a comment below and tell me what confused you most before this video. And if you want more simple explanations of complicated topics, hit like and subscribe. I'll see you in the next video.